Another stock we're watching this morning is Lyft. Shares are trading lower after the rideshare company reported its slowest revenue growth in 2 years. Lyft did beat street expectations. Sales were up 3% to $1.02 billion in the second quarter. Lyft also raised its full-year outlook. Lyft ridership, by the way, is not back to its pre-pandemic levels, which is interesting here. 21.5 million active riders on the platform in the second quarter. The shares taking a hit of nearly 10%.
Yeah, and even with that kind of 3-month marker that we've been looking at in the active rider growth that they were talking about year over year, it's a growth rate year over year of about 9.8%. And then what you should also do, everyone, when you're looking through kind of the 3 months ended June 30th, one thing that sticks out to me is they actually saw a decline in the average revenue per active rider as well. That was down by about 4.8%. And so earning less for each active rider right now, that's coming in at about $47.51. And just to correct myself, it's actually 8.2% growth rate that they had seen in the active rider base year over year. But still a larger question for this company about where they're continuing to be able to add on more of those drivers to engage with riders as well. And for the drivers, if you had asked them, because I always ask every Uber or Lyft driver that I take a ride with, I'm like, hey, how do you enjoy doing this? You know, which app do you find yourself toggling into more? Because they're just switching between all of those. And it's the ones that have more of those functionality and features that allow them to not just make sure that they're giving people rides, but also the packages that can just get thrown in the back of a car and taken somewhere. And so it's more of that optionality. And that's what I'm waiting to hear more from Lyft about, where they're going to continue to layer that into the experience.
Right. Something else I just want to highlight quickly here, because, again, the numbers on the face of it beat estimates. But I'm seeing some analysts here cut their EBITDA estimates, particularly the folks over at Morgan Stanley, who say that there are rising insurance costs. And there are multiple analysts who are mentioning that issue of rising costs related to insurance as a headwind for Lyft.
Absolutely.